Yo, what is going on, YouTube? El Toro back with another trade recap. You guys already know the drill. The Lappuccino action. Today we got Lucy, Breakers, Berry, Citrus. Pretty good. And we also have a little bit of wine. Delicioso. But anyways, let's get into this trade recap. Um, I'm gonna keep the format the same. I'm just gonna go over my notes, my pre-market notes, and my notes in the trade. And yeah, so let's get right into this. Where is my cursor? Cool. So today was Tuesday the 28th. Pre-market. We'll start with the daily time frame. We're inside of this daily busy. So if we're bullish, we want to catch some support from consummate encroachment of this fair value gap, but it looks like we are not catching any support. So this could be the beginning of a bearish retrace. Drop down to the 4 hour. We can see that throughout Asia and London session, we just dropped down quite a bit of points. And yeah, we note that we have this new day opening gap below us, which will likely be our, what's it called? Our draw on liquidity for the day. And we also note that we could be forming a brand new 4 hour SIBI. Go down into the 1 hour. We have this swing low, which is our minor sell side liquidity, which is our draw on liquidity, our bearish draw on liquidity. And it's important to know that we got a full candle closure below this swing low and this swing low, meaning we created a bearish break of structure. So now on the 1 hour time frame, price is heading down, confirmed. And we also note this recently formed 1 hour SIBI, bearish fair value gap. And yeah, once again, we have this new day opening gap, which is unmitigated, which is my bearish strong liquidity for the day. On the 15-minute, we have these two back-to-back SIBIs where we could catch some resistance from, since we are below the fair value gap. Going up into it, meaning, you know what I mean? Forget about it. Shout out to my boy Jojo. He just texted me. Okay, cool. So that's the 15-minute. And these are my pre-market notes. Daily, we created a new busy. We are currently testing the PD ray. Could be the beginning of bearish retracement. 4 hour, created tiny 4 hour bearish IFG. Why did I not mark that down? Right here, because it was so tiny that I didn't give a fuck about it. Excuse me, I didn't care about it. Likely headed to NDOG. Could be forming a 4 hour SIBI depending on 10 o'clock candle closure. And I also noted that it looks like we are reacting off a bullish order block, so the bearish bias was not confirmed at this point. This is the bullish order block I'm talking about. As we can see, we dropped down into it and began retracing. For my 1 hour, I noted that we created a SIBI looking to reject from the price range and take shorts to new day opening gap high. Right here. So I'm looking for price to go up, reject, come back down, and head to NDOG. 15 created a 15-minute busy from the bullish reaction off the higher time frame order block. So we created this busy bullish Peter Ray, and this reaction was from this 4-hour bullish order block. So this retracement up was caused from that 4-hour bullish order block, and I wanted to see this fair value gap get inverted, inverse, Chinese, ching chong, tomato. Yeah. So what did we do? My overall notes are high time frame is still bullish, but it looks like we have begun to retrace down. We are near mean threshold of the 4-hour range, meaning that longs could be in play for the big boys. My main draw on liquidity is new day opening gap. And my potential place was short out of the 1-hour SIBI, short if we inverse the 15-minute SIBI. And I said I don't really want to take longs unless we get clear bullish displacement, since my TA analysis was bearish for the day. So we open up and we have a massive regular trading hours gap. What this usually means, whenever a gap is more than 200 points in one direction, we will continue going in that same direction. So since we opened down with a 266 point gap, what it means is, and what is likely to occur will be that price continues to go down during New York AM session. So I said that at 9:30, price will likely continue going down. This is the 15-minute time frame. I said bullish reaction off the 15-minute busy. We kept going higher. I said waiting on higher time frame candle closures to help decide my bias. As of now, I am bearish. So whenever I refer to higher time frame, I'm talking about the 1-hour and 4-hour candles. I wanted to see where we close relative to this gap. So this was at 9:45 and we were still going higher. And since I was bearish, I wanted the 1-hour candle to close below this red line. So I noted price should create a bearish displacement leg here soon if we are bearish, prior to 10 o'clock, because 10 o'clock, obviously the 1-hour candle closes. So what do we get at 9:55? We got a 5-minute bearish IFG confirming that we want to go down. So what do? I place a limit right here for 2 contracts, risking about $260, and to make $680. So as you can see here, this is where I get entered in. And yeah. Here is that 1-hour candle closure at 10 o'clock. As we can see, like I mentioned yesterday, we'll pay attention to where the bodies are closing relative to the Peter rays that you're using. For this instance, I was using this 1-hour bearish fair value gap, and the most important price level in that gap is this red line. And what do? We closed below. So as soon as we got that candle closure below that red line, I was pretty confident that we would go lower. So what happens? We start accumulating and drawdown, which is never fun. Every trader knows that you don't want to accumulate in your drawdown. It's just a horrible feeling. But I still had conviction in play. We created this 1-minute SIBI, inversed it, and then quickly reclaimed the SIBI once again. Once we got a candle closure below, I noted that I don't want to see price in the upper half of the 1-minute IFG. So I don't want to see any candle closures above this red line. And what happens? We fail to get a candle closure above the red line, and price just goes down. So at this point, I wasn't sure if we were going to fade this swing low. I wasn't too confident at this point. So what did I want to see? I want to see a candle closure below this red line now, which is the consummate encroachment of this price range. Okay, so that's at 1027. And look what happens. As soon as we get that candle closure below that red line, we start to displace a lot lower. So that was at 1027. This picture is at 1035. I said, got candle closure below red line. This one right here. Next objective is a clean candle closure below first percent of fair value gap. TP should be hit if we manage to get this. So as I was typing this out, this candle decided to go fucking ballistic mode and just shoot all the way below first percent of fair value gap, which in my instance was good because I was bearish on the day. So yeah, as soon as we got this candle closure right here, I was pretty confident that my TP was going to get hit. Yeah. So at this point, I've moved my stop loss to the 1 hour SIBI low, and I noted that I did not want to see price close above first percented, because if we did get a closure above this gap, more than likely I would have gotten stopped out at break even. Well, I guess in some profit. So I ended up taking profit right here. I had 2 contracts. I sold 1 contract off to secure a 250 $250 winning day in order to get closer to that payout objective. And I just held 1 contract for a runner. And at this point, we were stalling around on the 5-minute chart, and we created this 5-minute IFG, which I said should deliver us lower. And I said going to close the trade if we get displacement down, because I had to go to the gym. Unfortunately, I did not go to the gym prior to the market, prior to New York AM session. So I still needed to do that and get that done with. At this point, I was in the trade for like an hour, and I was just sick of it. I just wanted to get it over and done with, but price was stalling. So fortunately, we ended up getting that bearish displacement down, and I closed out for my full TP. And the reason I closed out here and didn't wait for new day opening new day opening gap is because we could easily just create sell side liquidity, generate more and more swing lows for a later time. And the reason I had this feeling is because we failed to close below it 2 times, meaning that we weren't as likely to do it in the future. If we really wanted to go to that new day opening gap, we would have done it in one of these 2 price legs. So here are my notes for the trade. I said my reasoning, bearish sentiment, end dog is below us, 1 hour SIBI pushing price down, 5-minute bearish IFG, bearish regular trading hour gap. My order type was 2 limits, 2 contracts, break even at first percented, 2.63 risk to reward, minor sell side is final TP, this brown line. Thoughts, blah, blah, blah. And yeah, that's basically my trade recap. So back to back wins. Finally turned the account around. We're back to break even. And yeah, I'm gonna stick to risking about $300 to $400 per trade. I need 3 more winning days, and yeah, hopefully I get those winning days here soon. And yeah, but for now, I will remain patient. I will trust my edge and my ability to read technical analysis Tomorrow we have FOMC. We have Powell's last day as the Fed, so it should be interesting. We also have a lot of tech stocks coming out with earnings. We got Meta, Google, and some other companies that have earnings coming out tomorrow. So tomorrow should be pretty volatile. I will probably de-risk a lot. I don't even know if I want to trade, to be honest, but if I do trade, I will probably go in with 200 max of drawdown just because it's FOMC and the market tends to be a little funky on that day. But that's it for the trade recap. Cheers. W's on the day. And yeah, thanks for watching, guys. Peace.